Institutions just dumped 52,000 Bitcoin. But here's why I'm actually more bullish than ever. Let me explain what nobody's telling you. Professional investors sold over $3 billion worth of Bitcoin ETFs in the first quarter of 2025. Morgan Stanley, JP Morgan, Goldman Sachs, the biggest names in finance all reduced their positions. And the mainstream media is freaking out, calling this the end of the bull run. But here's what they're missing. This is the exact setup we saw before Bitcoin's biggest rallies in history. And I'm going to show you why this dump is actually setting up the next massive move to six figures. First, let's break down what actually happened. When these institutions file their 13F reports, they have to disclose their holdings. And yes, the numbers look scary at first. 52,000 Bitcoin sold through spot ETFs like BlackRock's IBIT and Fidelity's FBTC. But here's the context everyone's ignoring. These same institutions bought Bitcoin when it was at all-time highs near $73,000. They bought at the top. Now Bitcoin's trading in the 50s and 60s, and they're taking profits or cutting losses. That's not bearish. That's just bad timing by traditional finance. Meanwhile, smart money is doing the opposite. While institutions panic sold, retail investors and crypto-native funds accumulated over 40,000 Bitcoin in the same period. The Bitcoin supply on exchanges hit a 7-year low. That means people are moving coins off exchanges into cold storage for long-term holding. Think about what that means. Weak hands selling to strong hands. This is textbook accumulation before a major move up. We've seen this pattern before every single Bitcoin bull run. Big institutions buy high, panic, sell low. Then they FOMO back in at even higher prices. Now here's where it gets really interesting. This connects to something way bigger than just Bitcoin ETFs. We're in the middle of a massive shift in the global banking system. It's called ISO 20022, and most people have no idea this is happening. ISO 20022 is the new financial messaging standard that banks worldwide are adopting. It allows for faster, more transparent transactions with way more data. And certain cryptocurrencies are being built specifically to work with this new system. We're talking about XRP, XLM, YLGO, XDC, and a few others. Why does this matter for Bitcoin? Because while institutions are dumping Bitcoin ETFs, they're quietly building infrastructure for digital assets that work with traditional banking. The same banks selling Bitcoin are the ones partnering with ISO 20022 tokens for cross-border payments and settlements. This isn't about Bitcoin dying. It's about the financial system evolving. Bitcoin remains digital gold, the store of value. But these ISO 20022 tokens are becoming the rails that move money between banks instantly across borders. Both can win. Both are winning. So what should you be watching right now? 3 things. First, Bitcoin dominance. If Bitcoin dominance stays above 50% while institutions sell, that tells us retail and whales are absorbing the sell pressure. That's extremely bullish. Second, watch the next round of 13F filings in July. I'm willing to bet many of these same institutions will report buying back in at higher prices. That's when mainstream media will flip bullish again, right as retail starts FOMOing. Third, keep an eye on developments with ISO 20022 adoption. Banks in Europe and Asia are going live with this new system throughout 2025. As that happens,